Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points.
In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts.
Now, starting here from the monthly time frame, what we can see is that at the moment we have a very strong rejection to the upside from a historical monthly support and demand area. In fact, if we look closely, we can see that from this zone, in multiple occasions in the past, the market has respected the area already as support every single time, creating massive rejections to the upside. We can see again here and in here. The only time the market broke below the zone but then immediately back above was in this occasion here. Every other time the market respected this area as a strong historical demand and support area. And right now we had yet another test of this zone, and the market is currently in the rejection phase to the upside. So from a monthly standpoint, everything seems quite bullish, and there is the possibility of seeing more bullish price action away from this area, as already happened in the past when the market was rejecting this exact same zone. So here in the monthly, everything seems quite bullish. Let's keep that in mind and drop down on the weekly time frame. Now, from a weekly standpoint, what we can notice is that the market has just approached important structure. This area, in fact, was acting as previous weekly resistance here, preceding this rejection to the downside. Then the market broke above the zone, and that previous resistance was turned support here. And now the market is yet again respecting this area as support, and there is good probability of seeing a potential rejection to the upside being created away from this area. So the weekly time frame as well does seem quite bullish. Now, let's keep that in mind and drop down on the daily time frame. Now, from a daily perspective, the first thing that we have to keep in mind is that if we look at what kind of price action the market has been creating, it seems like right now buyers are trying to gain again the control of this market. In fact, if we follow the movements, the first rejection to downside was extremely strong. We had big red candles with a lot of volume, and clearly there was no sign of buying pressure in this push to the downside. However, right now, in this deceleration phase here, we can see that every time the market creates a push to the downside, immediately new buyers enter into the market, creating green candles and buying pressure. At some point, after these exhaustion patterns are completed, usually the market actually breaks out to the upside. We can see that happening over and over again. You can see essentially deceleration patterns happening in the market all the time. Sometimes they're a bit more clear, sometimes they are less clear, but a very simple example of this is, for example, this push to the upside. Everything was starting very bullish. Clearly buyers were in control. Then sellers started entering every time the market was pushing higher. At some point the correction came. It's a very similar scenario, but in this case it's even more clear that we are currently in a deceleration period. So in a situation like this, there is an increased probability of seeing a potential rejection to the upside being created away from this area. Now, when you see an impulse and you want to measure the potential correction, you have to take your Fibonacci from the high to the low of the impulse leg, and this gives a first potential upside target, which in this case would be the zone in between the 0.32 and the 50% retracement of the Fibonacci taken on the impulse leg. Now, before we dig deeper into what we have here from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing precisely on the GBP. Now, the first thing to keep in mind is that if we're looking at the data for the GBP, we're actually already looking at GBP USD because all currencies on the spot are traded against the USD. And we can see how with the last reports, net positions have been massively increased. We went from having 62.9k net positions up to 93.1k net positions, showing how institutions have been moving back to the bullish side for the GBP, so to the bullish side for GBPUSD, therefore making it stronger. So let's keep this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. Now back to the analysis. So in a situation like this, when there is this overextended M pattern, so a bullish pattern from a daily perspective and an exhaustion pattern here at the bottom, in a situation like this, what would I expect? Well, in this case, what I would expect is, as usual, that the best approach to the market is being reactive and not predictive. The monthly, weekly, and daily timeframes combined with the CO2 data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside for the market to retrace at least to the 0.32 of the Fibonacci taken on the impulse leg. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to the most complete mentorship program ever that I have created. You have the possibility to gain access to all the courses, the trading station software with the Telegram signals integration, one-on-one private mentoring directly with me, the CO2 data software that you see me use in all these videos. And if you continue to scroll down the website, past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.